You're listening to certified financial planner Doug Goldstein, host of the Goldstein on Gelt Show, www.goldsteinongelt.com.
Okay, I'm very excited to be talking to Jamie Wise, who is the founder of the Buzz Index. Jamie, let's just start with what is the Buzz Index?
Hey, Doug, how are you? It's great to be here. The Buzz Index, really what we do is listen across social platforms. There are thousands and tens of thousands of people online talking about their investment portfolios today as comfortably as they talk about their social lives or their products that they use, where they go on vacation, what they buy, what they eat. And today, as that conversation grows, there's really tremendous insight that you can gather by listening to the conversation and understanding the sentiment around the individual stocks. What we do with the Buzz Index is we listen every month to all of the stocks that are talked about, and we choose from the most talked about stocks, the 75 most positively discussed stocks. We include them and weight them by their positive sentiment and include them in the index each month.
Okay, let's just start with a very simple question. What does it mean to be an index as opposed to, let's say, a mutual fund?
Sure. So an index is really a rules-based methodology for creating an investment portfolio. So most traditional mutual funds have a manager that chooses the individual stocks that would go into that mutual fund holding. With an index like the S&P 500 index, it's rules-based. So the S&P 500 is an example of a market cap weighted index. And you can have indexes that are based on different sectors, different factors like value or growth, or our index, for example, which is a rules-based sentiment index, which includes most positively talked about names.
Tell me about other sentiment indexes.
Well, there aren't any, and that's why we created the Buzz Index. So it's a great question. Really, the field of social media analytics was born about a decade ago, and that's when consumer product companies really noticed that their clients were all online talking about their products. So think about Procter & Gamble or The Gap. They knew that their people were all over Facebook talking about the products. And if they could listen to that conversation, it could help them drive product decisions and marketing decisions. And that information was really valuable to them. The same thing is happening with the investment portfolios right now of today, where people are online talking about that. The problem is they're talking about 5,000 different stocks. And where do you start? And how do you think about positive or negative sentiment around any one stock? And how do you build an investment portfolio? What we wanted to do was really make it simple for people and make it accessible. And by developing an index that has consistent exposure to the most positively talked about stocks, we could then license that index to an exchange traded fund and make it accessible and investable.
So why would you actually think that what people are, talking about on Twitter or Facebook really matters? I mean, these are just people schmoozing.
It does matter. It matters a lot. And the whole concept of being able to find wisdom in a crowd is perfectly applicable to social platforms. And what really exposed that for a lot of people this past year were two big events. First was Brexit, and the second was the US presidential election, where all of the polls seemed to indicate something would happen. And then, of course, the exact opposite happened in real life. And what we're realizing now, and this has been something that's been studied for a long time, is the faults and the problems in traditional polling techniques where you have forced choices and you really have a low incentive for truth telling. Social platforms are completely opposite, where people have independence of thought. They have a high incentive for truth telling because they want to engage with other people online. They're looking for feedback. They're looking for validation. And those types of concepts that exist in the social environment allows you to gather data that really is predictive. And so it doesn't matter what, Doug is saying about a specific stock or Joe is saying about another stock. What really matters is that you have a large amount of conversation from a diverse group of people. And if you can take the average sentiment from that conversation, it really is reflective of what you will see happen to that stock over time. It really is a real-time measure of fundamental demand.
Mm-hmm. I just have to ask, does this work? It seems to me if you have, everyone's always looking for, the Midas solution, how to turn straw into gold. And if you found something, it sounds interesting. And just to sort of, let me describe back to you what you're saying. You're saying that you look at what people are talking about on social media and you feel it's accurate because you feel those people are being honest. about what they're saying, and therefore they might actually be either they or their friends are investing in ways that they're talking about. And if they're buying these stocks, that's going to make the stocks go up. So if I've described what you're doing accurately, does this make money?
It does. It absolutely does work. And it's been validated a number of different ways. First, we saw the validation by those consumer product companies and the social media analytics that they were doing. And you can see notably, and they talk about this often in their earnings releases and in their marketing materials, how much additional value they can get by listening to what their clients are saying on social media. Does it work for stocks? Well, first we see some other vendors trying to provide these insights. Vendors like Bloomberg or Thomson Reuters, recognized heavyweights in the industry, are offering social insights on their platforms for their user base to incorporate into the investment process. For us, since we launched the index last April and the ETF that's based on that, we have a real-time proof of concept. So absolutely it works. We show quite clearly that social momentum has proven to be a better performer than price momentum alone, right? So if you look at the iShares MTUM product versus the BUZ ETF, we have outperformed that index quite easily since we've launched by over 3% and over 6% just in the last 6 months alone. So we're now getting to show people
you launched when?
That it works. The ETF launched April 19th, so April of 2016.
Okay, so I'm noting, I'm neither criticizing nor complimenting. I'm simply noting this is a very new index. It's a new idea. We're talking with Jamie Wise, who came up with a new idea. He's the founder of the Buzz Index, which is an index which tracks what people are talking about on social media in terms of investments that they're looking at. One of the things that I've noticed, I speak to fund managers, I speak to hedge fund managers who are kind of this elusive, the elite money managers. And when they come up with an idea for how to make money, they don't share it. They'll just do it. They'll leverage it up so they can try and make a lot of money on their own with some new idea before everyone comes in and starts to do it, which usually dilutes an idea. Why did you choose to expose this idea and make it an ETF as opposed to maybe trying to trade it on your own?
Another great question. Look, my background is in the hedge fund world, and why bring this out in an index? Why make it accessible to everyone? I think the short answer is, we're trying to think longer term here. And I think what you can tell from these types of, non-traditional data analytics with respect to finance is that is happened. It is happening in the market today, and it is going to become a bigger and bigger component of people's investment decision-making process. There's no reason to hide something if it's a good idea and it works, right? The IP and the code of the algorithm, that is certainly our property, and that doesn't change whether we launch this index and launch this exchange traded fund and allow it to be accessible by millions of people. The code still lives with us. We understand how to listen to social conversations properly and analyze those millions of data points. What we're really doing is now sharing that, the output of that technology with everyone and allowing them to invest in it. The index rebalances every month. You can see the new names that come in and out. I'm a big believer in transparency. I'm a big believer in accessibility. And I think the structure for those products, and we're seeing it in the proliferation of ETFs over the last 20 years, really is the way forward for people. And there's no reason to hide those insights.
Mm-hmm. Let's talk about the theory behind this, because, everyone's got a phrase on Wall Street. In your case, it sounds like you're following along with the tradition that the trend is your friend, meaning you're looking for the trend that's going on and you want to jump on that bandwagon. On the other hand, there are other great, more contrarian strategies, things like, one of the more famous ones they call the dogs of the Dow, where you try to find stocks on the Dow Jones that have been hit terribly. They look like real dogs. That's often considered a contrarian strategy, and also actually has done pretty well over time. Although my disclaimer for everything you and I are discussing, of course, is that past performance is no guarantee of future returns. But why is it that, let's say in your case, the trend is your friend seems to apply, and it doesn't seem terribly contrarian?
Yeah, it comes back to how we're measuring the data. So if you think about a classic price momentum strategy, that's another trend is your friend strategy, but that is really backward looking, right? You're looking what stocks have outperformed and therefore they will continue to perform. That's one approach, but it doesn't do as well as sentiment momentum. When we think of sentiment momentum, and you have to have some flexibility in your strategy to be able to always have exposure to those names that have the greatest positive sentiment behind them. We think of sentiment really like, you can visualize it like an ocean, and it's got a normal ebb and flow to it, and that's the normal sentiment around any given stock. If you can identify a wave building in that ocean, they don't just stop and turn on a dime. A wave gradually builds, and it carries forward for some amount of time before it ultimately crests and then comes down. And that's what we're trying to identify, are securities that are building that sentiment wave. And because we now have access to data that is independent and free of forced choices and all of the other problems that you see in polling. And we've all been conditioned in financial markets for decades now to think of sentiment as the ultimate contrarian indicator. When everyone is, when the crowd is bullish, it's the top, and vice versa when they're bearish. That's not actually the case we think about it, because that can be predictive because it doesn't suffer from all the problems of polls, which have traditionally been the measure of sentiment in the market.
Interesting. Jamie, we're near the end of our time. In fact, we're over our time, but I just have to ask you, with your, I was going to say your crystal ball, but it's not really fair to say that because I know you've put a lot of research into this model. With your model, what are you seeing in the market coming up with the new administration, a new year? Yeah,
well, of course, Trump is all the talk because he's actually on Twitter and on social platforms, and he talks about companies directly. And, how do we make use of that data? And for us, what we always say is, it's not about the sentiment of Donald Trump. He is just one voice, and he does have influence, but he has diminishing return of influence because we get conditioned to expect him to talk about stocks. What he serves is as a catalyst for a bigger conversation online. So when Trump talks about General Motors or Boeing or Lockheed Martin, what he is doing is driving tens of thousands of people to go online and voice their own opinions about that stock as an investment. And they can agree or they can disagree. And so there's real value in listening to the follow-up conversation, not necessarily the individual tweet about Donald Trump. And outside of all that, what we see happening is, real trends in technology are identified by investors online. People get it. So names like AMD and NVIDIA, which have been great performers and top holders in the Buzz Index for the last year, I'd say, have really done well because we've been able to listen in to the excitement that people have as it relates to these companies being able to deliver graphic processors, GPUs, that are at the cutting edge of all of the advancements of artificial intelligence that the world is going to be more and more relying on going forward. We see that, we hear that buzz, pardon the pun, out in the marketplace. And of course, those names get positioned in our index.
Very interesting. All right, Jamie, this has really been fascinating. It's interesting to see how someone comes up with a new idea for an index and actually makes an index and an ETF out of it. Certainly different from a Dow Jones index, which has been around for 100 plus years. So I really enjoyed talking to you and learning about this. Once again, I'm just going to alert people that there are lots of interesting ideas. It's definitely worth researching this and many others to realize that at the end of the day, you're still involved in the stock market with all the risk that entails. But in the last few seconds, Jamie, tell me, how can people follow you and follow your work?
Sure. Thanks, Doug. We have lots of content on our website. So head over to Buzz Indexes, BUZZ indexes.com. And of course, the ETF is always accessible. You can find that at buzzetfs.com, and it's New York Stock Exchange listed, ticker symbol BUZ.
All right, we put a link to that at the show notes of today's show at goldsteinongelt.com. Jamie Wise, thanks so much for your time.
Hey, appreciate it. Good talking to you, Doug.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website or send him an email to doug@profile-financial.com.